The Export-Import Bank, or EXIM for short, is the subject of a lot of debate on Capitol Hill. But most of us don't know what it is or how it works. It's often sold as a win-win for American companies and the US economy. But is that really the case? I'm Matthew Mitchell with the Mercatus Center at George Mason University. Let's take a closer look. Congress created EXIM 80 years ago. It's an independent agency of the federal government, and it subsidizes fewer than 2% of all US exports. But fully 61% of this financing went to just 10 large corporations, including Boeing and General Electric. There are three ways that the EXIM Bank issues subsidies. First, it sells insurance to foreign purchasers of American products. Second, it directly loans American firms money to boost their exports. And third, EXIM guarantees loans that private banks like Goldman Sachs make to foreign buyers of American products. Since most of EXIM's assistance comes in the form of these loan guarantees to foreign buyers, and since frankly these are really confusing, this is a good place to focus. Let's say that a foreign airline, we'll call it Air XYZ, wants to borrow money so that it can buy airplanes from an American plane maker. Air XYZ pays a fee to EXIM, and in exchange, EXIM guarantees up to 85% of the loan that the private bank makes to Air XYZ. In other words, EXIM agrees to assume a large percentage of the risk of the private bank's loan to Air XYZ. If Air XYZ can't pay back the private bank, then EXIM offers to cover the cost. Because EXIM guarantees repayment of a large percentage of the loan, Air XYZ can obtain financing on much better terms than it could in the private market. So foreign firms buy more American-made products, and the US sells more exports. A win-win, right? Not when you take a look at who loses. Those who win from the deal are obvious. The American producer, of course, gets to sell more planes. At least for a time, the foreign purchaser, Air XYZ, benefits. They pay a fee, but they get a loan, and they get it on good terms because the private lender gets to offload most of the risk to EXIM. The private lender also wins. It makes money by making loans and charging interest. And in this case, it gets to offload the risk of those loans. And of course, the EXIM agency, its staff, and its political allies benefit. But there are those who lose. First, anyone other than the privileged purchaser who tries to buy an airplane loses. Imagine that you and I are bidding for the same product, but your purchase is subsidized by the taxpayers. Clearly, I'm going to have to end up paying more. So all airlines, their employees, and the hundreds of millions of passengers who fly on airlines other than Air XYZ lose. EXIM subsidies artificially raise the price of airplanes, and that ends up artificially raising the price of air travel. International carriers among them, of course, are harmed a second time. That's because they end up losing market share to Air XYZ. This explains why some of these airlines have sued to stop EXIM subsidies. Second, taxpayers lose. EXIM likes to trumpet the fact that in recent years it's returned more to the Treasury than it's taken out. But for over a decade, they operated at a loss. And the agency's own Inspector General, the Congressional Budget Office, and the federal government's Government Accountability Office have all taken EXIM to task for understating the risk to taxpayers. CBO, for example, says that if you properly account for the risks, EXIM adds $2 billion to the deficit over the next decade. The third group that loses are other borrowers. Because the EXIM subsidizes loans to Air XYZ, it ends up diverting capital from millions of other non-subsidized borrowers, including small and medium-sized firms that seek credit each year. Finally, even the foreign buyers that EXIM subsidizes can sometimes lose in the end. In many cases, these are subprime borrowers who can't find finance without EXIM support, and it's for a practical reason. Markets have judged their projects to be too risky. EXIM's support, however, encourages many of these borrowers to take on risks that they can't afford. If they default, they're in a worse place than they were if they hadn't found the finance. In the 1990s, for example, EXIM subsidies encouraged Air Nauru to purchase some Boeings. Air Nauru eventually defaulted, and the bank seized Nauru's jets off the runway, leaving the country's athletes stranded on the tarmac following the Micronesian Games. So, is the Export-Import Bank really a win-win? When you take a step back, it becomes clear that there are many who lose.